Hello, and welcome to episode 13 of
Mo Money,
the investing show for millennials by millennials. We're teaching you how to get rich later, starting now. I am the host. I don't mean to boast, but if you're looking for the one with the most, just know I'm the best one from coast to coast. The others don't come close. It's whose show? MC Mo's. Don't forget it. Now let's get to our
Mo Money Market Update.
Now, as I discussed last week, the Doha meetings happened this past Sunday, and as expected, no deal was reached. Iran didn't even fucking show up to the party. The shit show in the Middle East continues. But surprisingly, oil did rally this week, even with the news of a no agreement. After initial sell-off of the price of crude, oil has managed to climb back over the past week, managing to stable at a price here just above 40, which is great news for most oil companies in the United States because they will be able to cut a profit as long as it stays above $40 a barrel. Now, this week's episode of Mo Money is all about...
Hello, we interrupt your previously scheduled program to bring you what truly could be the biggest and most important fight of the century.
Hello, we are reporting to you live from a remote location in Queens, New York, to bring you the teeth-busting, bone-crushing, blood-gushing, everyone better come rushing for the fight in Flushing. We have two of the most fierce competitors to ever fight for your money in the history of Wall Street. After tonight, only one competitor will walk out of this ring with their wallets a little fatter than when they entered. The other will end up like every man after divorce, alone, beaten down, and broke. Now, let's introduce our competitors. Coming to the ring first, the new kid on the block, or rather on the street, a lean, mean, money-making machine, Damo Arigato, Mr. Roboto, the Robo Advisor. And coming to the ring next, the old reliables. They've been around as long as the market itself. At your command, the man with the plan to make you a couple $100,000 grand and having you retiring on a beach house on the sand. It's the human, the real, flesh and blood financial advisor. Now, these two ruthless, money-hungry fighters will go for 5 rounds. Fighter who wins the most rounds wins the match, and potentially billions of dollars. Now, first round is customization. The robo-advisors do not pack much of a punch. Most robo-advisors have you take a brief survey about your age, your income, your risk tolerance preferences, how much you make, etc. Then they give you a small portfolio, tell you how it's going to be diversified amongst usually ETFs, tell you how much you're going to be putting into each, and then your expected returns needed to reach your end goal. Okay, the real-life flesh and blood advisor will sit you down and actually really get to know you. They'll ask you about your life plans, if you plan on having kids, how many, if you want to go back to college, if your kids are going to go to college, if you plan on buying a house, all of that, to gauge exactly what the best portfolio of investments would be for you to truly reach your financial goals. Okay, this round is a clear winner for the human touch. Round 2, good God, the robo-advisor comes out, nearly knocks out the real-life advisor. A lot of people stay away from advisors because they know they charge so much. Robo-advisors charge you anywhere from 1/4 to 0.5% of your assets, while real-life advisors can charge anywhere from 1 to 2%. That really adds up in the end. That's just the start. A lot of advisors charge you on their commissions to buy and sell stocks, charge you commission on other products such as life insurance. Remember, your advisor has bills of their own to pay, sometimes creates a conflict of interest. Is this really the best time to sell this stock or buy this product? Did your advisor just want to make money so they could buy a new car or pay to be shit on or have their balls tortured by that Wall Street dominatrix that Vice did a very great interview with? Keep your money safe. Round 2 goes to the robots. Round 3, helpfulness. Tables have quickly turned. This round finds the robo-advisor just being absolutely beaten. Face bleeding, looking like Rocky near the end of Rocky 1. There is just no robotic placement for the human touch when it comes to helpfulness and education. Okay, robo-advisors are not going to walk you through the finer points of investing. It cannot hold your hand. Okay, that's where the real-life advisor really adds value over a robo-advisor. Finding a good advisor that you can trust is better than finding a good doctor or even a good life partner. They are invaluable in times of need. Take, for instance, the financial crisis of '08. Market crash, people panicked, rightfully so. Lots took what was left of their money and moved to the sidelines for safety. Those advisors who had gained their clients' confidence by doing right for them over time were able to be there for their clients, hold their hands, and walk through hell with them. And in 3 short years, the market was back at new highs. Advisors can talk you off the edge in times of panic with rationale. A robot would most likely just calculate your chances of dying at the height of whatever edge you're standing on. No contest. Real life, flesh and blood advisor wins round 3. Round 4. Robots have been taking a beat. Now they're down, but they're not out. Okay, this round they have an advantage. They don't have brains. Humans are humans. They make errors, and we usually all get set in our ways in some way or another. Robo-advisors do not. Robo-advisors are constantly evolving and learning. Robo-advisors have a very simple method. Humans usually might spread their clients out amongst a group of different investments. Now, most advisors aim to beat the market, and that's not as easy as it sounds. They could cost you money and their determination to be right and prove themselves. Who provides the better returns at this point is still unknown, as robo-advisors are still a very new concept. But many people are attracted to the element lack of human error and emotion, an investment based purely on numbers. At the end of this round, I'll have to call it a draw. There really is no guarantee of returns, no matter if it's a real person or if it's a robot. So we are humans 2 and robots 1. Going into the final round, will it end in a tie or will humans win it all? Alright, the final round comes down to options available. It's clear that one fighter has an advantage. Robo-advisors do offer traditional IRAs, Roth IRAs, and even regular taxable accounts. Real advisor can offer you all that, plus 529 plans for the kids and life insurance. A lot of robo-advisors often offer many tax harvest options, which help their clients offset gains with capital losses to lighten their tax burden, like we discussed in last week's episode, which has been able to save clients a good chunk of money. It's one of the finer pitch points robo-advisors like to use on their websites. Robo-advisors don't give you many options in terms of investments, and most, if any, allow you to invest in individual stocks. Most of them just set you up a portfolio full of ETFs that they semi-try to diversify amongst stocks, emerging markets, foreign markets, bonds. Advisors have the ability to give you a full range of options: stocks, bonds, ETFs, mutual funds, life insurance, all of that. The knockout punch goes to the real life flesh and blood advisor. Now, as you can see, there's a lot of added value for working with a real life flesh and blood advisor, but unfortunately, a lot of them have minimums, much higher than our generation has to invest right now with student loans and poor paying jobs. $1,000 to $2,500 might not even be worth their time. They might not even let you in the room with that little amount of money to invest. This is when a robo-advisor might be the best choice. You can save and make money with a robo-advisor, switch it over to a real-life advisor when you get older and you have more money. Okay, some robo-advisors do not have minimums or have a very low minimum, but honestly, with the help of
Mo Money,
I'm hoping to educate you to be your own great advisor. That's what we are about, after all. In the categories where humans won, it's a lesson I've taught you on this show before. Be ready for crashes and don't panic. Okay, always diversify amongst sectors and investments. Always make sure to have a plan. Now, the fintech, the financial technology revolution, has been hitting Wall Street hard. Some are scoffing at it. Others, like BlackRock, Fidelity, are scrambling to buy up these new startup robo-advisor companies. Our generation is, of course, very wary of the old guards at Wall Street, and we love all things new and all things technology related, which is what makes robo-advisors so attractive to us and our generation. At the end of the day, if a robo-advisor is what gets you investing, I say 100% go for it. But if you find a flesh and blood advisor that you trust, that's a great option too, because your money can't grow if you don't invest it. So in the words of Axl Rose, go ahead, get in the ring. Thank you so much for watching another episode. You know we will be here every Friday with a new episode. For now, like, comment, subscribe, share this video, like me on Facebook, follow me on Twitter. Mo Money, signing out.
Tried to be humble, but the paper got me. Mommy screaming, hey papi, like Hova, getting Rockefeller. Prince of the city, I'm feeling like Biggie when Diddy first gave him that bad boy. 100 Hummers like Manny and Baby. Since a juvie, I knew I was hot, boy. Shout out to Cash.